It's Tuesday the 3rd. Good morning. How are you doing? This is what we're talking about. Gold and tech have bounced. Australia has hiked. And Elon Musk has plans to take the AI trade into orbit, Tom.
A big session over in Asia, particularly the strength coming through on the Kospi in South Korea. That trade is back, up 3% across the regional benchmark. You're seeing the ripple effects then. European futures pointed to gains of 0.5% after record highs for European stocks yesterday with upside of more than 1%. Gold on weaker dollar, that is lifting the yellow metal. Possibly other factors as well. Gold up 4.6% so far in the session. The countdown to the opening trade starts right now.
Welcome to the programme, everybody. Welcome to the opening trade. It is Tuesday, the 3rd of February. It's just gone 7 o'clock here in London. Now, we've spent 2 working days thinking about thinking about the dollar, thinking about what Kevin Walsh might mean for the dollar. The dollar's gone higher as a result. That's caused a lot of question asking and answer seeking around various assets and some risk-off moves. Today, does it look a little normalised? I mean, when you've got such substantial moves still in markets, it doesn't feel anything but normal. But maybe there is room for other themes to cut through. We don't have answers on what Kevin Walsh means, but maybe we have a little space for other themes to be in the spotlight. We are still talking about gold and silver, though. Is that to do with Kevin Walsh, or is that something else? The dollar is weaker once again. So we've seen silver volumes actually getting back down towards normal, which is maybe what I mean when I say something is at least looking a little bit normal. But nothing is normal about the Asia rally. We've got the MSCI Asia Pacific looking at hitting levels we haven't seen, making gains we haven't seen since Liberation Day, since April.
Gold has bounced, silver's bounced. Is this a dead cat bounce? I don't know. The tech trade looks amazing. Samsung's absolutely rocketing higher. Yep. We'll talk about rockets in just a moment. But this is the gold and silver trade. I think it was always going to bounce. You can't get that kind of a move on that kind of a scale without some sort of a bounce coming through. There are going to be people sitting on the sidelines going, I want some of that. And they've had some of that. The question is, are there more people going to be making that trade? The tech trade's sensational.
Yeah, what we saw over the last 2 days, trading days, a healthy shakeout. And now we're back to the similar themes. Yep. Hardware is playing for you very well today, given the SK Hynix and Samsung, to your point. And precious metals are back. Of course, we have to make up for the gains that we've made and lost since Friday and the sell-off. Really interesting in terms of the data out of the US. I just want to reflect on what happens in terms of manufacturing and the factory gauge out of the US, because there was strength there. And so you saw this divergence between the Russell 2000 and the gains that came through for the S&P and the NASDAQ. And that suggests maybe some looked at the data yesterday, that ISMI manufacturing survey suggested there's a bit of a broadening in terms of the economic strength of the US, and some of the bets around the Fed started to fade a little bit. So you're not expecting a full 25 basis points until July from the Fed. Marginally, but there was some adjustment on the back of that stronger manufacturing data.
And we were just showing some of the real gainers from that hardware story that you were talking about and the tech strength coming through. The Kospi up by more than 5%. The Indian market responding to other factors, not just this, but also there is this. There is the risk-on mood in markets, but there's also the fact we've seen a big cut in the tariffs.
The trade deal. We'll come on to that. Trade deal between India and the United States. In all of this, inflation, you could argue, could be back. And the Australians think it might be. The RBA has hiked. You've got the governor sounding kind of cautious, not giving too much forward guidance, but still the indications are looking ahead. The Australians are going to have to hike again, and even that will not bring inflation back to target. Then you extrapolate that out and think, are other central banks going to face the same problem? To your point about the ISM, is the Fed going to face the same problem? Are we really going to see cuts in the United States this year? Are other central banks, the ECB, potentially, I'm looking at you, but I'm not quite convinced about that. Are you going to have to hike as well? The first major central bank has hiked rates. Is the cycle changing? Is the rate-cutting cycle coming to an end? How close to the bottom are we? What does it mean for risk assets? Don't know. But the reality is we've just seen the first major central bank.
Is this an Australia-specific story, or is this a broader global story? They're seeing a resilient labour market. The inflation is above target. They target between 2 to 3%. It is above target. It's closer to 3%. There's strength in housing. There's strength in services. And markets are now fully pricing in another hike this year and potentially an additional one.
Could be 3 this year. Could be 3 this year. But even then, inflation will not be back down to targets. Why do we think inflation's coming down in America? Do we really think inflation's coming down in America? The commodity market's not saying that.
No, apart from gas prices last night, for weather reasons, which we know about. Short-end yields, then, responding to this story, 7 basis points higher. And to your point, we saw higher yields in the United States on the back of that ISM data yesterday. So it does seem as if at the coalface of things, there is a higher yield story building. We'll see how that rubs up at the start of the European trading day with the French story, where we've got a little less stress, perhaps, in the French dynamic.
Yeah, and French CPI then crossing later, and we will be breaking that for you. The other key dynamic, we touched on this in the fast part of our conversation, was what's happening with technology. Some key stories coming out of the US then overnight. There was Palantir, there was Oracle, a debt sale there, relatively well received. But let's start with the SpaceX and xAI.
Yes.
So we've been reporting around this. Ed Ludlow and the team have done some great reporting in terms of breaking the news around SpaceX. So we have confirmation that SpaceX and xAI will be combining, still heading for that IPO later this year, which could be a mega IPO.
Yeah.
This seems to be pretty good news if you're an investor in xAI. They are, of course, the home to Grok. All sorts of controversies around that chatbot.
Yep.
Very prominent controversies in recent weeks. And also, this is a company that's burning $1 billion a month. SpaceX is a proper business, making a lot of money, supplying the International Space Station, supplying the Ministry, the Defense Department, or the Department of War in the US, and NASA as well. SpaceX is a significant business with significant revenues and significant forward upside, particularly when it comes to Starlink. xAI, if you're an investor in xAI, this seems like a good deal.
Why is he doing it? What is the benefit to Musk to putting these two businesses together? You can argue that there is this whole narrative around taking kind of AI into space, that you can deliver on that. I've heard that same story from Blue Origin. But what's the objective here?
Solar-powered data centres.
In space.
Yes, absolutely. He wants to send 1 million satellites into space. They filled in this application on Friday to send 1 million satellites into space. That's their plan here. And on day one, this seems to be something... I'm leaning here on Matt Levine's excellent piece on this subject. On day one, this is something quite prosaic, perhaps. It is about providing the capacity for our data centres here on Earth. Yeah. Maybe in the future it'll be about new frontiers and exploring space, but actually it's about right here on Earth. It's about providing solar-powered, which doesn't sound very Trump administration, data centres.
How are we feeling about this? Is this peak AI? Is this kind of... The IPO could be absolutely massive at this point.
Could be out of this world, couldn't it?
Quite literally, into orbit. This is kind of where the AI trade is going to be taken. Will investors... would it have been an easier thing to get SpaceX onto the market than putting these two together and trying to get it onto the market as well? It strikes me as being the answer to that is yes. So why is he doing it? Is it because, as you say, there are concerns around xAI and the issues that it faces? I don't know. Let's fold in Tesla as well. Why not?
Maybe it's for humanity and the planet, and not just for Grok. But
why don't we just fold the whole thing into Tesla? Tesla becomes a SPAC, effectively. Like, what is Tesla now anyway? So might as well turn it into a SPAC and get it effectively to acquire these two businesses and take them onto the market that way. I don't know. There's various...
Tesla has a play in renewable energy, in clean energy, storage.
You want me to talk about Orsted, don't you? Trump, another court case actually lost in the United States regarding offshore wind, which is going to be a good thing for Orsted at the open. But we've also got other news on Orsted this morning. The wind provider is going to sell its European onshore business, which I think I've heard about being talked about before, to CIP, $1.44 billion. So basically, this is another way that they can shore up their balance sheet, which has been stretched and stressed of late as a result of some of the difficulties it has faced in the United States. So that is the latest on that. But I think probably the latest court win in the United States will also be a beneficiary. So we'll watch that stock at the open.
We have lots to watch at the open. We'll also watch shares of Akzo Nobel. That's one of the conversations we're going to be having this morning. Greg Pouguillaume is the Akzo Nobel CEO. Of course, he joins us. We will talk about supply chains, as we often do, but all the other themes that add up to his earnings story this morning. Not such a positive outlook being painted by them this morning. Darren Marr will be with us, HSBC Digital Assets Research Head of Senior FX Strategist. So a great opportunity to either pick up on the dollar trend or perhaps focus in on what's been going on with some of those alternative assets, with Bitcoin, with stable coins. Karim Shedid joins us, BlackRock Head of EMEA Investment Strategy. So we will continue the conversation about markets with Karim.
And on the US economy, after the manufacturing data of yesterday, 1 p.m. UK time, the Fed's Barkin will be speaking on the US economy. We'll bring that to you, of course, those comments and lines. 2:40 p.m. UK time, meanwhile, we'll also be hearing from the Fed's Michelle Bowman and get commentary from her. And at 3 p.m. UK time, it is the US job openings. On the news, of course, that non-farm payrolls will not be released on Friday. We'll get more details on that, given the shutdown in the US that continues. And later, it is the World Government Summit that begins in the Middle East. And AMD, that is a big one, of course, the competitor to NVIDIA coming through with earnings. And Merck Pfizer as well. My focus certainly will be on AMD and whether or not they set a positive tone in terms of the demand picture.
OK, no data again. Does this confuse the picture? Does it change the narrative around these markets? Are we going to end up in a situation once again we don't have clean reads on what is happening in the labour market in the United States? Which piece of data do I rely on? All these questions are coming back to me.
I'm sure transparency is the holy grail and what we all want. But we saw last time how people could find whatever argument they wanted in an opaque situation where the data wasn't available. They could make whatever case.
And a shutdown is not about the economic impact. It's very minimal, particularly if this is expected to last just for a few days. We know that President Trump, the White House, has been reaching out, of course, to Democrats and the senators to get this across the line. But the lack of detail, the lack of clarity in terms of the jobs picture, and where is the focus for the Fed right now? Is it on inflation? Is it more on the labour market? Because, of course, they've pivoted between those two mandates. And now, with the expectation, of course, that we do get a new Fed chair come May, and what Walsh makes of that dynamic in terms of inflation.
Powell downplayed the employment story. Thought it was much more balanced. That was definitely the commentary coming out of the last meeting and certainly out of the last press conference. So is the data going to support that? The whisper number's 53k, the survey number's 70k going into this data, but we don't know when the data's going to come. But then we move beyond that. How data dependent does Walsh feel at the moment? Is he going to be a data dependent Fed chair?
Or more of an ideologue? And that seems to be a debate we still don't have an answer to.
No, and I agree. That's what we need guidance on. But is he going to keep his mouth shut until we start to get into the confirmation hearing process? What else do you need to know this Tuesday morning? Let's walk you through the details. President Trump says he's seeking $1 billion in damages from Harvard University after the New York Times reported that his administration had backed off demands for $200 million to satisfy accusations of wrongdoing by the Ivy League institution. On his Truth Social platform, Trump said that Harvard had been, quote, feeding a lot of nonsense to the failing New York Times. He did not specify under which authority he'd seek the compensation. Harvard did not immediately respond to a request for comment on this story. The French Parliament has adopted a budget for 2026 after Prime Minister Sébastien Lecornu survived not one but two no-confidence votes. The new plan reduces spending cuts and tax increases, resulting in a larger deficit for France. The budget is expected to bring a period, though, of relative political calm, with few trigger points for lawmakers to demand a confidence vote going forward from here. But remember, 2027 presidential elections. And Indian stocks are surging today, and the rupee is gaining after the US reduced tariffs on the country's goods. President Trump said the US will reduce tariffs on India from 25% to 18%. He is also reportedly removing an extra punitive 25% duty applied in response to India's purchase of crude from Russia, while indicating that the Indian Prime Minister Narendra Modi has also agreed to potentially buy more oil from Venezuela, which implies less coming from Russia.
We don't know what the Indians are giving up for this yet. We don't know the details of this deal. Have they really committed, and what does that mean for the refiners of India? Have they really? Because the refiners have continued to buy that cheap Russian crude. That would be a pretty significant. If they have structurally changed that view on Russian oil, that'd be pretty significant. It's the geopolitics of the relationship between Moscow.
They also don't buy much from the United States, actually, in terms of goods. And the number there that Trump's expecting they will buy going forward is kind of huge compared with what they currently buy. So are we really going to see that ramp up in purchases of American goods? Many feel doubtful.
Yes, I mean, fast-growing economy, but still a huge income gap with the US, obviously. Interesting that StoneX is up by more than 2%, but to your point, we don't have all the details on what's been given up here. And tariffs coming down, sometimes it makes sense to think about it from 25 to 18, but from 50 to 18, it is quite a big reduction, isn't it? And quite a surprise, actually. The President Trump seems to have had this about face. So being well received in the Asian session. Let's tell you what else is coming up on the programme. We'll head to the World Government Summit in Dubai and hear from IBM CEO Arvind Krishna. That conversation coming up in the next hour of programming. Plus, Amundi plans a €500 million share buyback. We'll check on the wealth manager's stock at the market open. Up next, Akzo Nobel CEO joins the show to discuss the latest earnings and outlook for 2026, which may be a little softer than expected. That's certainly the guidance coming through this morning. If you have any questions for our guest, then please do get in touch. IB plus BBTV Go this morning and every morning on the Bloomberg terminal. That's where you'll find us. This is Bloomberg. This is the opening trade, 7:19 in London. The Asian markets, of course, firmly into their trading day and looking set for the best gains since the post-Liberation Day recovery for global stocks. So that's setting the tone, pretty positive over in Asia. Could some of that, it looks as if a lot of that will creep into many of these markets. Perhaps, Guy, X the FTSE, where we could have some impact, other sectors in focus, I suppose.
Can I pour some cold paint on your optimism and just kind of...
Sure. I'm just reflecting 6/10 higher on the stock 600.
Cold paint. It's going to hit a record this morning, another fresh record high. One stock which I think is going to be interesting to watch this morning is going to be Akzo Nobel. Does coatings, paints. That's the kind of thing that this company does. It's been in a tight range for quite a while, as you can see in terms of its stock price. The Q4 numbers are out this morning. Slight miss. It's the outlook, though, that I think is really interesting, really muted, pointing to a difficult first half. Second half gets a little bit better, but that's only because of good comparisons that are likely to come through. Gregory Poux-Guillaume is the company's CEO and joins us now. Good morning, sir.
Good morning.
It's a tough environment you're in right now. The auto sector, we see that in the chip space, is finding life very, very tough. The coatings business, the paint business is very, very tough. You're going to close the Axalta acquisition, which you announced in November, back end of this year into next year. Gregory, is there anything we can do to kind of speed things up a little bit, to get the turnaround going a little bit faster? Because you're painting quite a muted outlook in terms of what you are seeing for this business, to excuse the pun.
Yeah, I'm actually a lot more positive than you are. I think the economic backdrop hasn't been very helpful, but overall, organic sales for us are flat for 2025, so it's not a great year in terms of commercial momentum, but it's linked to the soft macro backdrop. But if you look at our business for Q4 and for the full year, we're price up, we're profits up, we're cash up. So we're within 1% of the guidance that we announced at the beginning of the year, pre-Liberation Day. So it's not great commercial momentum because of macro events. But in a market like this, what you focus on is self-help, and we've done very well on that, and we will continue to do well in 26.
Okay, let's talk about the self-help. Is the self-help internal, i.e. we deliver cost cuts, you've delivered a lot of that? Is it external, i.e. an acquisition of a smaller rival? Or is it actually the end consumer? Can you raise prices? Kind of give us a sense of the balance of the mix of things that you can do to continue to help the business move along?
I'll hit these points one by one. We raised prices in 2025. Prices were up roughly 1% for the year. It'll be the same in 2026. There is pricing power to these products, and we have technical differentiation, and therefore we will be able to capitalize on that. From a demand perspective, if people on the deco side don't feel confident about the future, they'll be less likely to repaint their home, and there's a little bit of softness on that side, but overall consumer confidence is stable. From a B2B perspective, which is more the coating side, it's very much linked to GDP growth worldwide, and therefore we are hit by the same impacts as everybody else. But the self-help measures, it's about cost efficiency. We're taking out €500 million of cost, 200 million functional costs. The plan's already finished. We're still getting the benefit of that in 2026, an additional 50 million euros. That's a carryover from last year. And industrially, we're making our footprint more efficient and more with better capital returns. And as we are 2 years, we just finished 2 years of a 3-year program. 26 is last year. We'll have 90 million of benefit from that in 2026. So it's very much internally focused. That's self-help. The Axalta merger is a completely different game. It's about creating a global leader in coatings.
Gregor, on that, good morning, it's Tom. On the Axalta merger, 2027 is the time frame, early 2027. This is potentially a $25 billion merger. What are the synergies that you're looking at, and are there any potential headwinds to getting that merger across the line? What are the biggest challenges in terms of making that merger happen efficiently?
I keep talking you up. So you said early 27. Our target is late 26. We'd like to close this thing in late 2026. The main hurdle between us and closing are regulatory hurdles. As you know, in a large merger like this, you have to filed for regulatory approval, and the two most significant geographies are Europe and the US. And by the end of next week, we'll have completed all our filings, all the material filings. So we're progressing really well, working really well with Axalta. And we believe there's a lot of value for customers, for employees, and for the market in general, and that this merger should find support. But we'll put our best foot forward and aim to close by the end of 26.
Okay, end 2026. Okay, we'll make a note of that. Artisan Partners, a major shareholder, of course, in Axalta, is opposed to the takeover. How much concern is there around what they may try to do?
Look, I can't speculate for Artisan. This is really a question that you'd have to ask them. But what I would point out is that when they wrote this letter that said in November that they were opposed to the merger, they were not a shareholder in Akzo Nobel. And in the weeks that have followed, and I've met with them directly in the US in December, and it turns out that they are now Akzo Nobel's fourth largest shareholder. They announced that they crossed the 5% threshold a couple of weeks ago. So essentially, since they wrote that letter, they've deployed $500 million of capital into Akzo Nobel to become our fourth largest shareholder. I'm not going to speak on their behalf, but I think they're voting with their money.
Good morning to Greg. Can I ask you about global manufacturing? Do you see any green shoots in the global manufacturing story? We saw that in data out of the US yesterday, but that's just one data set. Some German data has come in better than expected, but still not showing growth. Are you seeing any reasons to be cheerful on that front?
We're seeing, we're forecasting a slight pickup in the second half of 2026. We believe the first half of the year is going to be very similar to 2025. We believe that vehicle refinish, the paint that people use to repair their cars, that market is going to pick up in the second half of 26 because insurance premiums are adjusting to a new market reality. Last year, the premiums were really expensive compared to people's disposable income, and essentially people were no longer repairing their cars. That, we believe, is going to normalize in the second half of 26. We see the deco market in China rebounding in 27 as construction starts picking up again. And we see a lot of positive markets. Aerospace order books are full. We are the market leader. It's really about keeping up with demand. But it's a mixed bag. Mostly it's subdued. Not going to change in early 26. Hopefully some signs of pickup in the second half of 26.
Okay, Greg, it's a fast-moving geopolitical situation. Politics in the States changes a lot. Are you assuming 2026 is a little quieter, or is it far too difficult to make that kind of prediction as it impacts your business, I mean?
I wish I could predict that, but, things change all the time. I think India had 50% tariffs to the U.S. When I went to bed last night. When I woke up this morning, I think it's 18%. So it's things are moving. If I take Q4 for us, the weakness came from North America. A lot of the weakness actually came in North America came from Mexico, and it's because of the tariff environment and some of our customers slowing down their investments. But for Akzo, we're multi-local. We are wherever our customers are. So it's not so much about a direct impact for us. It's an impact on our customers.
Thank you. Thank you very much. Thanks for your time, the Akzo Nobel CEO, Greg Poux-Guillaume. We thank you very much for joining us. Coming up, Bitcoin bounces from yesterday's lows, but the cryptocurrency remains under pressure. We'll talk to HSBC's head of digital assets research. That's next. This is Bloomberg.
Morning, how are you doing? Tuesday morning, half an hour to go until the cash equity trades here in Europe starts. Futures look pretty positive. They look pretty positive over in the States. Asia's had an absolutely cracking session. Technology really roaring ahead. If you back out Chinese tech, that is. The Korean market definitely bouncing back quite strongly. Gold's back up. FTSE 100 is going to be the underperformer today, though, which is interesting, but oil's trading quite a lot softer at the moment as well. So, yeah, positive picture. Are we back? is the bond market exciting this morning?
Let's have a look, see how exciting the bond market is. And the reason it could be is because, of course, we've had some news out of France. I say could be. We're not seeing a huge amount of movement, are we? But we have had some news out of France overnight. The Prime Minister surviving 2 no confidence votes and the budget being voted through. So that means that the French that we were primed to watch the French 10-year yield. We're not seeing a huge amount of movement in it, as I think we'd already got to this point, hadn't we? We're already assumed that we were through the worst on the French political narrative. Where we are seeing a lot of risk on trading and some really interesting dynamics is over in the Asian markets. Let's get there. The Asian market's faring pretty well. Winnie Su has an update from Hong Kong for us. A different picture today then, Winnie.
Yeah, morning, Anna. Indeed, because we are enjoying our best days since April, while yesterday was actually the worst day since April, so lots of volatility here. But for now, we are seeing that the MSCI Asia up some 3%. And as you mentioned earlier, it's really been driven by the gains in the tech shares. And in fact, that top contributor to our gauge today is Samsung Electronics, jumping 10% and having its best day since 2008. And that's really lifting the Kospi up here about 7% to another record close. When it comes to the HS Tech, a bit of weakness, down 1%. So it is an outlier because of some concerns around how authorities are thinking of raising tax for the internet companies. Now flip the board and take a look cross asset, because yes, we talked about RBA raising rates, and it is the first major central bank to do that this year, and that's lifting the currency and also the bond yields here higher. However, it did pair a bit of gains just earlier because of that cautious tone from the presser. When it comes to the Japanese 10-year yield, also here ticking slightly higher. The demand was quite weak when it comes to the auction earlier today, signaling a bit of nervousness when it comes to investors' mood ahead of that election this weekend. Now, also take a quick look at Indian assets, because that big news in our region today is President Trump cutting the tariff rates to 18% from essentially 50% for Indian goods. And you can see that's lifting overall stock benchmarks, especially exporters, and also helping currencies. And it's very significant for the India market because the U.S. is the biggest export market for India. Back to you, Anna.
Winnie, I'll pick it up from here. Thank you very much indeed, Winnie Su, on a big day, of course, in terms of the Asian equity trade. Amazing moves in Samsung, as Winnie was saying, as the focus returns to some of the hardware and memory chips from SK Hynix and that company as well. Let's turn to Bitcoin now, though. The cryptocurrency still under pressure today. It's marginally in today's session, but that's after a brief rebound from a 10-month low. Guests on Bloomberg TV have weighed in on the recent performance.
Cycles for Bitcoin were preceded by the gold price increasing first. This so-called debasement trade, if I can just back up a little bit, I think is misplaced.
A lot of these different gauges of risk all kind of broke down at the same time in October and early November. And we often can see that when Bitcoin breaks down, or just, it can be not necessarily a leader of a decline in the equity market, but at least a sideways kind of move.
If we're right about our previous discussion, dollar weakness and Bitcoin being an alternative store of value, I think for the real diehard believers there, this could be one of those buy the dips moments.
Bitcoin's a great example, down 12% in the past week. It's really struggled, and it's predominantly a liquidity proxy. Certainly some of the commodities have been these liquidity proxies as well. So I think you stay away from those and you stay to more the tried and true. We still like large cap US, mid cap US.
Let's get another view on the Bitcoin and crypto story and bring in Dara Meher now, Head of Digital Assets Research and Senior FX Strategist at HSBC. Dara, good morning.
Morning.
So the ETF story seems to be crumbling for Bitcoin. Geopolitics hasn't helped it. It's down about 20% over the last 12 months, down a little over 30% since its peak in 2025. What is going on, and does the story for Bitcoin turn around in 2025?
I think you captured it right in that 30-second little video vignette of people's logic for what should drive this price are so varied. Is it an inflation hedge? Is it a risk asset? Is it an anti-dollar debasement? They're all out there. All the theories are out there. And I think the price action we've seen in cryptocurrencies more broadly is just reflective of this real struggle for investors to understand what to do when all your correlations, your reliable links, your relationships are just not reliable.
Because it seems to play no function at this point.
Well, there you go.
Does it play any role? Does
You've got
Bitcoin
gold.
play
Why do you
any
need
role?
Bitcoin?
Oh, come on, look this morning. You just shouted Asian equities higher. Oh, and gold higher too. And you're like,
Yeah.
oh, seriously? So, look, I think at the moment we have to kind of go, you're relying on these beautiful historic relationships. Dollar is the safe haven. No, it's not. Well, at least not this week, but maybe next week. We got all these relationships, and I guess the Bitcoin maximalists would have all been, this is the inflation hedge or this is the anti-dollar.
Yeah.
And they're just not working, right? And so you basically can come up with any number you want, but I think the core issue here is just a breakdown in standard financial market relationships.
Yes, and so maybe ask more about one of those relationships,
Sure.
and that's Bitcoin and gold. What should we be seeing there? Because does that explain some of the weakness that we've seen in Bitcoin? We've just been so distracted by this huge rally in gold, and maybe it attracts a similarly motivated investor, at least in part?
It does, right. So that's one of the strands for Bitcoin, is that it's kind of crypto gold, right? Gold on blockchain. And you've had Jim Steele on this show a few times, our metals analyst, and he's been very bullish gold. But I think, even he's been surprised by how amplified the rise was. But again, you see the volatility, you see that breakdown over the last week or so. Just a very small Kevin Warsh-induced nudge, and suddenly, gold is on the retreat even more and more. So I think there's a sense that positioning here has been squared up. That's what's creating volatility. But I'm not sure that people are making that great parallel, a very, if you like, reliable parallel between gold and Bitcoin.
Are we at one of those phases? We seem to go through phases with Bitcoin. Sometimes we talk about Bitcoin and that's the exciting thing, and other times Bitcoin's fading and we're talking all about blockchain, and maybe about stable coins. Are the latter in the driving seat now in terms of where the narrative goes?
We looked at corporate earnings announcements, right, through last year. And what was curious about that was stablecoins were talked about all the time. And Bitcoins were like, nothing, radio silence. And I think that continues. We saw it again in the third quarter earnings season. I think we'll see it as we're moving through Q4 earnings season now. Corporates are talking about stablecoins because this operates broadly within kind of the guardrails of regulatory crypto, right? And therefore, if you're thinking about adoption, institutional adoption as being the next big leg up for digital assets in general, stablecoins are that vehicle of the moment, and that hence why they're the talking point. And actually, many more transactions are done through stablecoins on chain than are done through Bitcoin and other, if you like, more volatile crypto.
Is crypto's biggest problem that Chinese investors can't buy it, and they can buy gold? So they buy gold and they can't buy crypto?
It's part of it. I'm not sure it's necessarily the biggest problem.
So what is the biggest problem?
Well, I don't think there is a problem. I think there's a constituency that will use cryptocurrencies that are fully flexed against the dollar, whether it's a speculative asset or whatever it might be. I think for institutions, though, what they're looking at is the plumbing. They're not looking so much at kind of, hey, how much money can we make out of Bitcoin? What is the plumbing change to capital markets?
So we think crypto is a speculative asset, but in reality, it's a plumbing asset.
Well, I would say digital assets, it's all about the plumbing. That sounds like a terrible report title, doesn't it?
Yeah.
No, it doesn't sell. But really what it's about, look, why do institutional investors get excited about blockchain? Because they can move money quickly. Because it lays the prospect of T+0 atomic settlement. That's what's exciting.
That's the exciting bit.
You can guess whether Bitcoin's going to 200,000 or going to zero. That doesn't matter. For investors, I think for institutional investors, it's the plumbing that matters.
Back to the 200,000 versus zero. If Michael Saylor has to sell, and MicroStrategy has to sell, what do you like? Is that the next big catalyst you're watching out for?
Honestly, no. And I'll give you radio silence on that one. I would say the next big catalyst I'm looking for actually is away from Bitcoin and cryptocurrencies, and it's tokenized deposits at commercial banks. That is a massive lump of money. You think about what's the market cap of stablecoins? $300 billion US. What is the cumulative deposit base of the big five currency blocks? $100 trillion US, right? Against 0.3.
Sounds like we're missing the point here.
Well, it is.
When we focus on crypto.
I know, but you don't get exciting headlines about tokenized deposits, do you? You can't say, tokenized deposits is more. Right, so that's the reality.
Fair enough.
For people who want to move money, that's the way you're going to move it.
Okay, well, we'll unashamedly go back to the plumbing then, and we'll talk about that, Dara. But so this is where it gets, I think, a bit more interesting in that plumbing that you described
more interesting than it's already been.
And that opportunity that you're watching. I mean, is there geopolitical concern there? Is there dollar dominance concern in stable coins in the same way that we've seen played out in the wider market around the fiat dollar?
I think that's fair. There's been different approaches depending on your jurisdiction. US is all in on stable coins and essentially banning a retail central bank digital currency. China, for example, is all in on a retail central bank digital currency and banning stable coins.
But there's just so much dollar stable coin and not so much something else. Is that worrying?
Yeah, but then I come back to the tokenized deposit view. Like, even allowing, it's true, basically 99% of stable coins are US dollar.
Yeah.
That's $300 billion. You've got 100 trillion of deposits. Some of them are in dollars, some of them are in euros, some of them are in yen, and they're all there ready to be tokenized. So I think if you're trying to protect monetary sovereignty, if you're trying to protect against backdoor dollarization, what you do is you promote your tokenized deposit regimes. Now, that's okay in G10, but I think to your point, Anna, where you're in EM and they want access to hard currency, then stablecoins still provide that route.
If what you're forecasting around stablecoins and tether and tokenized deposits, if that comes to the fore, is that at the cost of Bitcoin or to the upside of Bitcoin?
I think there's a different audience, right? There's different horses for different courses. Right? I think those who are in the Bitcoin market in a big way are viewing it as a hedge or, as a speculative asset. Those who will be deploying stable coins, tokenized deposits, what they're really about is how can I move money quickly? How can I move it cheaply? And if it's aligned with tokenized equities, tokenized bonds, tokenized gold, that settlement, composability, you could lend a bond off your balance sheet for 45 minutes.
That's a 2026 story.
Yeah.
It's moving that way, for sure.
But you want no volatility in that trade, don't you?
Well, you got no price volatility.
Yeah,
that's why I love forecasting stablecoin against the dollar. I think I might be right. I think I might be right.
On that note, Dara, we will leave it. Dara Ma, Head of Digital Asset Research and Senior FX Strategist, joining us from HSBC. Atlanta Fed President Raphael Bostic urging a little patience when it comes to rate cuts.
I didn't have any. I think maybe one or two cuts would put us at neutral for my outlook. And that would make it very unlikely if we did that for us to get our inflation back down to our target or even get it on trajectory to that. So I think this is a time to be patient.
Do his colleagues see it the same way? No interest rate cuts for 2026. The RBA just hiked. We're going to talk central banks next. This is Bloomberg. Morning, how are you doing? The Australians have an inflation problem. The French do not have an inflation problem. The data is dropping onto the Bloomberg terminal right now out of the French Statistics Office. Month on month, CPI EU harmonised inflation negative 0.4. Okay, so that's down from positive 0.01. The year-on-year number therefore goes to 0.4, down from 0.7. 0.6 was what economists had predicted. The headline CPI number therefore year-on-year goes to 0.3, down from 0.8, forecast 0.6. The Australians have an inflation problem, the French don't.
Yes, and we've talked a lot about Chinese product coming into Europe, haven't we, as a result of not going to the States. The bond markets are not really moving on this, it seems, but we've been watching for movement here on French bond markets, European bond markets, perhaps even on the back of the French story of last night, the fact that they finally managed to get a budget through. Yeah. We've heard from the finance minister this morning saying that the budget deficit will be reduced from 5.4 to 5% this year as a result of this. So this, at the margin, maybe it brings down the yield spread a little bit, but it's already come down a lot.
So it's already compressed massively. I think we're trading at kind of mid-50s in terms of the spread over Germany. That's already been priced. So a lot of this had already been expected, I think, in terms of what we've seen.
To what extent is there still some premium, though, risk premium priced in? But, to your point,
does this solve the problem?
Come down.
Is this a...
Well, it does until the 2027 elections.
Precisely.
Right?
Yeah, 2027
get a bit of political stability until then, until the presidential elections in France?
Yeah, the way the analysis was going, I was reading this morning, saying they still have a big deficit, but there are just far fewer triggers to trip over, and not so many tripwires ahead in terms of the French story. So that's maybe why it looks a little calmer.
Let's bring in for a broader view on the markets then. MLive's Adam Linton standing by. Adam, we'll start. We want to get your views on metals. We want to get your views on FX. But let's start with central banks then, given we've just been talking about the inflation dynamics and the divergence between what's happening in France versus the US. But I want to start on the RBA and what Guy was saying. Australia clearly has an inflation problem, and they were the first major bank to hike rates in 2026. Is that an Australia story, or should we read more broadly into central banks having to adjust to a higher inflationary story?
I think there is an element of needing to adjust, but in terms of central banks actually following through and delivering tightening, I think the RBA is a little bit of an outlier at this stage. So, heading into 2026, there's speculation we could see the ECB hike, we could see the BOC, we could see the RBNZ. ECB has actually, gone the other way. It's looking at, its strength in the euro. That's actually more of a dominant factor. BOC, I think there's more of an argument to be made that they could tilt in a dovish direction, and it still remains to be seen with the RBNZ whether they'll follow through. And then, so I think, within G10, FX and central banking, RBA is more of a truer hiker now, and traders are also rushing to price more tightening. Yes, you've already got the BOJ, they've tightened policy, but we know from a yen perspective, if you're a trader, fiscal forces are more dominant, and if it's to get a move higher in the yen, it's not going to be because the BOJ are tightening policy, it's going to be some level of intervention or the prospect of, which is going to be guiding price action.
Is the gold and silver trade back on?
I'll be hesitant to say back on, but I still think the structural bull case for gold does remain in place. Obviously, we saw some pretty aggressive selling on Friday, and it looked as if we could see more of the same yesterday. I think we've seen some, the retail hands shaken out. I mean, has attracted a lot of wider participation you typically see, and I think some of the moves that we've seen has probably caused cause for concern, and some of those retail flows will probably limit and reverse. But the bull case, we want liquid alternatives to the dollar, central bank buying, physical demand. That remains in place for gold. I just don't think we'll necessarily see the parabolic rises that we've seen, and there's going to be more two-way risk, and any move to the upside in gold isn't necessarily going to be as linear as it has been previously.
OK, and where do we stand on Kevin Walsh now? Because we've spent the last 2 days asking a lot of questions about what he will mean, and probably getting very few answers about what he will mean at the Fed, about how hawkish he'll be versus his commitments to President Trump to cut interest rates, or at least his statements recently that he would be minded to. His views on QE, maybe that pushes a steeper yield curve, but is he going to be actually data dependent when he arrives? So many questions, I suppose, and we don't have many answers.
I mean, we could do a whole show on this, but in terms of the top line summary, yes, we saw a hawkish reaction initially because previously he's been an inflation fighter, and that still remains the case, but ultimately he doesn't necessarily see the risks of inflation as present as he did in 2008. He thinks AI will help productivity, higher productivity equals lower rates. But ultimately, from a market perspective, in the short term, I think it's more of a case of status quo, and continuation rather than revolution. Here's just one vote. We've seen the Fed regional governors reappointed, and so there's only so much he can do. I think going forward, what's more interesting is how he actually, alters broader policy at the Fed. There's been some suggestions that he wants, less communication from Fed officials, which, if you're, trading those events, that suggests there is an element of high volatility which could creep in further down the line, particularly if they're tightening the balance sheet. That's another thing for the market to ponder. And then also, if you're getting less communication from Fed officials, you're relying more on data. But as we've seen, at the end of last year, and with the BLS report cancelled on Friday, we're not getting as much data potentially as we could do. So I think higher vol potentially, towards the back end of next year is possible.
OK, Emily's Adam Linton. Adam, thank you very much indeed. You can get up-to-date analysis and insight from Adam and the rest of the team. Just go to MLive. Go on your terminal. Let's get the stocks to watch in the Tuesday session and bring in Jennifer Creary. Jennifer, what are you watching?
Hi there. We've got a lot going on this morning, and we're going to kick off with Orsted. A couple of things happening with Orsted. The most recent being that Orsted has agreed to sell its European onshore business to Copenhagen Infrastructure Partners for €1.4 billion. The second thing is a US judge ruling in favour of Orsted, saying that it can continue developing a wind project near New York. Now, this is the fifth time a court has ruled against US President Donald Trump in his efforts to delay those projects as he tries to roll back Biden-era climate policies. We've got a judge saying that the Sunrise Wind project faced greater harms by a total pause of construction than the government faces from continued mitigation efforts, bearing in mind the project was losing about $2.5 million a day as it sat idle. Next up, European chips are in focus. That's after NXP Semiconductors reported underwhelming fourth quarter results. That's despite fairly positive results from peers like Texas Instruments and Microchip. So we could see Infineon, ST Micro, AMS, Osram also could see a knock-on effect off of the back of that. Finally, we're ending on Porsche. That's after a Bloomberg News report that Porsche is considering axing a line of electric vehicles in order to cut costs. We have the CEO quoted by People Familiar as saying that 718 lines of the Boxcar and Cayman's EVs could be at risk because of development delays and rising expenses. Now, you can see that Porsche's shares are down quite significantly over the past year, so those shares could be under further pressure this morning. Back to you.
Jennifer, thank you very much. Jennifer Creary with an update on those stocks we are watching this morning. I was thinking at the start of the programme about whether we were in danger of anything looking normal this morning, and perhaps everything continues to look completely mad. We have European futures pointing substantially higher. We have Asian stocks doing incredible things, don't we?
Yeah, if you put Hong Kong to one side.
Yes. Well, there is
mainland
a
Chinese markets
story.
are doing very well, but it's Korea, Japan, and just to reflect on the fact that European stocks actually notched a record high on Monday.
And they're going to potentially do so again today.
Yeah.
Maybe this is a new normal, and we haven't even gone into space yet with our data centres. Then, how high will those hardware names climb?
In terms of the earnings season...
That's next year. We can wait till next year.
We're mid-earnings season.
Yeah.
Is the earnings season going well? The sense at the moment seems to be actually fairly positive. So are the fundamentals backing up the rally that we are seeing? The gold story clearly has, I think, probably caught a lot of people by surprise over the last 3 or 4 days. Yeah. Does that introduce extra volatility into other asset classes? Does it just change the mindset in terms of the two-way price action that we could see?
Just don't know how to read the risk on, risk off of various data set, various market moves anymore. Yeah. It's all just dollar related.
We should watch industrial metals, copper, and the story about China building out additional inventories. We're seeing copper prices higher on the back of that, so we'll be watching the miners as well. Not just gold and silver, but copper has come into play today.
The car stocks, I think, are going to be fascinating. NXP, the chip producer, just flagging once again weakness in the car sector. Akzo Nobel, that's an interesting story there as well. The car sector continues to be an area of weakness for Europe. This is what stocks are doing. We'll get to the market open in a moment. 5 minutes away. This is Bloomberg. Less than 2 minutes to go until the opening trade here in Europe. This is the legacy from yesterday, out of Monday's session from the United States. This is where Europe went out. We basically drifted sideways after that. We had a good ISM number in the United States yesterday on the manufacturing side. That certainly lifted sentiment. What is interesting this morning is that the dollar's rolling over. Asian tech has been absolutely on fire, and that's the trade, I think, that's going to be a bigger factor maybe going into the European Open this morning, Tom.
Yeah, did we get another record for European stocks after the gains that we saw yesterday, pointing higher by 0.7%. So looking to build on that record of Monday. To your point, the tech trade could filter through given the huge jumps that we've seen, particularly with comes to Samsung and the share price there. But that's lifted the broader Kospi, as you were saying, Guy. The FTSE 100 in focus, basic resources, copper prices are up about 4%. Gold and silver are back, so we watch the miners with the FTSE 100 in focus, pointing higher just by 10 points. DAX futures pointing to gains of 0.6% over in Germany. Anna.
Tom, let's talk about some of the individual stocks and sectors in focus. We'll start with Orsted, the wind-related business. Orsted is going to be selling its onshore wind unit to CIP for 1.4 billion euros. That's part of the news flow. The other part of the news flow is that a US judge has revived Orsted's New York wind project. It had been halted, we know, by President Trump. So some good news there for Orsted. The chip makers, they're certainly in focus. NXP Semiconductor reported slightly slower growth in its automotive market than anticipated last quarter, as the company is trying to put together some kind of comeback or pushback. But that's the story out of the Dutch semiconductor company. So we'll continue to see, watch if there's any read across from that into other players within the sector. Akzo Nobel in focus. They see little earnings improvement this year due to muted demand from customers in North America and other markets, Guy, as we know because we spoke earlier to the CEO.
If you're going to pick a paint colour, what would muted demand be? I don't know. We'll pose that question. Let's talk a little bit about what these markets are actually doing. Here's the reality. The opening trade is upon us, and we are anticipating a reasonably positive performance. Maybe some underperformance in the FTSE 100. That's what we get initially. Keep an eye on what's happening with the mining stocks this morning. Keep an eye on what's happening with the oil stocks. They're going to be an interesting aspect to the FTSE 100. Stock 600 will wait for a few other stocks to get open, up by 0.4%. We're expecting a positive performance out of the CAC 40. It's going to be interesting to see how the auto sector trades in Germany this morning. The mood music may be a little less positive. The AEX is out as well. It is up. We'll see how ASML trades. The IBEX is also tracking a little bit higher. CAC's up by 0.4%. Tom, what do you got on sectors?
In terms of the top sector right now, basic resources, as we expected, copper prices up by close to 4%. You're seeing gains, of course, in terms of silver pricing up close to 10%. Gold gaining 5% as well. So basic resources at the top of the list. Banks also doing fairly well so far, up up 0.8%. On the downside, the biggest losses coming through from media. Utilities, of course, that safe haven tilt off down 0.3%, given the broader rallies that we're seeing. And again, at the index level, to your point, the FTSE 100 underperforming its European counterparts, just gaining 0.1%. The CAC current over in France up 0.3. Anna, what is catching your eye?
Yes, I'm drawn to the performance of Publicis. So that stock is down by 3.4%. This is the worst performing sector, the media sector, overnight. And we've had numbers out from Publicis this morning. I thought I saw something that suggested it might go higher at the start of trade, but they've beaten in terms of the revenue growth, but they're planning more M&A, and there's an AI push underway. Maybe there's some concern about where that might take things, but Publicis shares falling after we saw numbers there. It's interesting to me also that we've got oil prices a little bit weaker. The Iran story seems to have just ebbed away from the top of the news agenda for a little while, as President Trump says he's talking to the Iranians. But we do see energy names moving higher, so they're not really responding to that weaker oil price this morning, moving more with the basic resources.
It's quite a mix, actually, in terms of what's driving, points-wise, stocks to the upside. ASML is the biggest gainer. So the chip story is having an impact out of Asia into Europe this morning. But defence names are also tracking higher as well. So it's interesting to see what's happening there. Names like Rolls-Royce doing well, Rheinmetall adding quite significant numbers of points to the upside as well. But it's the banking sector also that's quite heavily in the mix too on the upside for Europe this morning. Downside, Astra, Publicis, Rexel, Shell, Prosus. Again, quite an eclectic mix. I don't think there's a clear, obvious kind of rotational narrative in the market other than the fact that maybe we're buying back into tech after what have been a disappointing few days. ASML certainly being pushed back to the fore in terms of the trade. Driven out of Asia, Samsung having a great day, big customer, ASML benefits.
Absolutely. So the hardware story versus the software certainly in focus. Let's start there in our conversation with Karim Chidid, head of EMEA Investment Strategy at BlackRock, who joins us on set this morning. Karim, nice to have you with us. Thank you for joining us. So we do see this real focus on hardware versus software overnight. The Asian hardware providers really doing well. Some of that coming in to the European story as well this morning. On the software side, we saw Microsoft, SAP sold off after their numbers. We've seen some of those business development companies that lend private credit to those software names. They were under pressure in yesterday's session in the States. How much are you playing that divergence between the hardware and the software?
Focusing a lot on it, actually, because when you look at the investment directions that we put out for 2026, one of the key themes we talk about is this theme around AI breadth and how to expand the AI theme both within it, broaden around it, and also beyond it. And this idea is really leaning on this rising dispersion. And it's dispersion within AI names, such as what you just highlighted around hardware in focus versus software, but it's also dispersion in the broader equity market. And we're seeing it in earnings. As the earnings season is now well underway, we're seeing this rising dispersion and this rising closing gap between the earnings of the concentrated software names of the past couple of years and the rest of the AI ecosystem and the rest of the stock market.
Okay, so it is a theme you're leaning into. Yeah, you talk about investing in, around and beyond AI. And in terms of around, we've talked a lot about sustainable energy as being one of the themes that, despite the politics in the States, has been doing well on the back of data centers. You also point to quantum. I mean, how much further does this particular investing around AI story have to run?
It still has a lot to go, because when you think about that theme, it can really extend to a lot of places. It's the power demand theme, to your point about sustainable energy, which went through a performance turnaround in May last year and continues to turn around, has further to go in our view. And it also can tap into the basic resources and this general, we were just talking about basic resources, this general idea that resources are finite and demand outstrips supply. So it's a structural demand for this broader ecosystem, which is underpinning the prices of these assets.
Karim, would that dispersion theme, that dispersion story, would it still hold up if there is a pullback in capex spend on data centers?
It's a great point, and one that is why we're seeing a lot of focus from clients also on some hedges in equities. You know, we're seeing a lot of clients here in Europe buffer their equities, including U.S. equities, as a form to hedge for the tail risk because of the concern around, okay, we have a base case that is very positive, is what clients are telling us. We agree that this AI theme has a lot more to run with rising dispersion. But what if the capex spend is what if the doubts rise further, and that's where the hedge.
You pull on that thread and it all unravels, or is it more nuanced than that?
It's much more nuanced than that, because you are looking at pretty robust adoption assumptions from AI, right? Like the wider economy adoption is still at 9.5%. It tripled from 3 to 9 in 2024. It flatlined in 2025, 9 to 9.5, but it has a lot more to go if it follows the curve of previous innovations.
But doesn't the price of compute need to come down dramatically for it to broaden out? And that's the problem.
And this is where the resources trade comes in, right? Because this idea that if the prices of resources are going up, then the cost of the build-out is higher. What are some of the breakthroughs on efficiencies that could happen? And here you look at, the rising productivity that AI could bring, and we're starting.
But that's the derivative. Does the price of compute need to come down dramatically in order for it to broaden out into the wider economy? And doesn't that undermine the case around Nvidia and all of these big mega cap tech stocks that are so important to the market?
Yeah, which is why there's a lot of focus on any breakthroughs for the price of compute, which comes back to the point around quantum. Very hard to time. We're seeing rising demand for quantum.
And very speculative.
But quite speculative still, and very hard to time. So we're seeing an approach, a portfolio approach, that positions in a small allocation in these types of exposures. So like a small hedge, let's say, upside hedge.
How do I hedge the downside in the big tech stocks? What do I do there? What is my hedge? Is it buying European stocks? Eurostoxx 50 at a record this morning? How do I hedge that?
A couple of ways. The first is the buffer strategy that I mentioned, which is really capping some upside to hedge the downside. Okay. It's an increasingly popular strategy we're seeing in U.S. equities. The second is, as you said, more regional diversification. This is not a rotation. This is a breadth theme. So we're seeing continued demand into U.S. equities, but also rising demand into Europe, into EM. EM had a record year of flows in 2025, for example.
Yes, and so one of the places you look to diversify is EM debt, right? And you talk about the real yields that are available there. Are you seeing inflows? Is that what exchange-traded products, are they showing that demand is real? And how does that withstand all that volatility in the dollar?
Absolutely. We're seeing a lot of inflows into EM debt ETPs. That also had a record. So when I say EM had a record in flows, it applies to both asset classes, equities and debt in ETPs. And in ETPs, it's on the debt side, it's fairly evenly split at the moment between local currency and hard, although we're seeing this focus on carry. This idea that yield per unit of volatility on the EMD asset class looks pretty good. And that's why we're seeing persistent demand there.
What assumptions are you making about the dollar, particularly when you have that view on EM? Is that an assumption that there's further dollar weakness through 2026?
The way that we're looking at the dollar is, and again, we're responding to client questions here in terms of what to do with FX hedging. So historically, portfolio data across Europe that we analyze show that hedging is fully in practice in fixed income, but not in equities. 2025, this has started to change. FX hedges and equities have started to increase. We've seen flows, ETP flows, into hedged U.S. equity exposures increase from 2% in 2024 of all U.S. equity buying to 38% in 2025.
That's a big jump, from 2% to 38%.
It is. And so that's something that a lot of clients are considering to hedge, and how much to hedge.
Can I just take you back to the EM trade? If I take 5% of US assets and I put them into EM, the effect is massive. Is the EM universe big enough to take diversification out of the United States without causing huge problems in the EM trade, which ultimately kind of gets too hot and rolls over? There's a lot of talk about diversification, but the US is so big a market that even a tiny fraction of those assets coming out is going to have a massive effect elsewhere.
Which is why it's not a rotation, it's a breadth story. Of course, US equities remain 65% of global benchmarks, and and we still see a lot of investment opportunity in US equities. Earnings are delivering double-digit growth in US equities, and there's still a lot of opportunity to invest there. It's more a breadth story where you're coming from a very low under-owned space in EM, so this is not a place that is crowded at all. When I talk about record flows in that space, you're coming from a low base. The record flows still look small in number compared to the other regions.
Karen, can I go back to the AI theme? And I'm not sure where the media landscape fits in with AI, where the ad agencies fit in with AI, but we've got Publicis out this morning. Their shares are weaker as a result of their numbers, and that's weighing on the sector. So WPP and others, they're all weaker. So away from the individual names, just thinking about that sector, I mean, this is one sector where they're talking about their customers intensely relying on new AI products. They're going to go out and do more M&A that involves AI-driven tools. Is this a sector we have confidence will benefit from AI, or are we still not sure yet? Is the jury still out?
And this is a really big point, because the focus in the past couple of years on AI has very much been on AI build-out. Now we're starting to see a spread of focus as well to AI adopters. And the AI adoption theme is one that is central to our portfolio playbook in 2026. And we look at it in the context of sectors that have rich data are able to make a bigger difference for their earnings by adopting AI into their models. And here, I think some of the most obvious sectors point to areas we already spoke about today, like banks, which have been doing well, best performing sector in Europe. That's a sector where they can make a difference. Healthcare. So these are a couple of sectors.
So it's having the data that's the currency there. Yeah.
Cameron, can I end on gold before you go? What do you say to your clients about whether gold is still a diversifier, given the volatility that we've seen in the precious metal, and whether you want exposure to the pure play gold or to the miners?
Yeah, and this is a very interesting topic with the price action of the past 3 days. But when we zoom out, and here it's important to zoom out and look at the gold role in a portfolio versus stocks and bonds, it still behaves like a diversifier. It has a low 0.3 correlation versus stocks and bonds over the past decade. That still stands, and we do see demand for gold continue, especially as a geopolitical risk diversifier. We look at the opportunity in both physical gold, where we're seeing significant flows into the gold ETCs, and gold miners, because for gold miners, the margins are really positive, because you have a high gold price still, even after the last 3 days price action. Year to date, it's up double digit, and a relatively still low oil price.
Karim, great to see you. Thanks for stopping by to see us. We always appreciate it. Karim Chadid, head of EMEA Investment Strategy, joining us from BlackRock. Call 6 looks like this morning. Let's talk you through some of the price action that we are seeing. Generally fairly positive. Defence stocks are up. Chips are leading. You've got some of the defensive plays, though, still actually delivering decent gains. Nestle's actually a little bit higher this morning, but LVMH maybe a little less so. What else are we watching? Let's find out. Jennifer Creary joining us with the details.
That's right. We're kicking off with a look at Amundi. Those shares are up 5.2% this morning. That's after Europe's largest asset manager delivered a beat on fourth quarter pre-tax profit. The Amundi saying that it's benefiting from investors diversifying away from US dollar assets. Investors clearly happy with that this morning. Next up, we're going to flip over to Publicis. The communications group delivered a beat on fourth quarter earnings. The CEO saying that AI won't be a headwind, but investors perhaps disagreeing with that. Those shares are down 4% this morning. Next up, we've got Akzo, the Dutch paints company, missed fourth quarter earnings on muted demand in North America and some of its other key markets. Also, its earnings outlook fell short of expectations. Those shares under pressure this morning, 3.3% down. Finally, we're ending on a look on those miners, perhaps an example of investors buying the dip. That's after gold, silver, copper prices all reversed their record rally over the new year. But those mining shares up, all green across the screen this morning off of the back of that.
Okay, Jennifer Creary on some of the stocks on the move this morning. Thank you. Coming up, Nintendo reporting a smaller than expected quarterly profit despite solid sales of the Switch 2. We're going to bring you more on the numbers. That's next. This is Bloomberg.
Welcome back. This is the opening trade. The opening trade looks pretty positive across European stocks this morning. The FTSE 100 is perhaps underperforming a little bit. We're only up by 0.3% elsewhere, getting some really decent gains. In particular, the DAX up by just over 1%. So we've got this read across into some of the technology names coming through from the Asia session, Tom, and perhaps that is one of the themes driving us a little bit higher. US futures also looking positive.
Let's stay on tech, intergalactic tech, maybe with Elon Musk combining SpaceX with his AI startup xAI, and a deal that values the combination at $1.25 trillion. He's on track to be a trillionaire potentially by the end of this year. The acquisition was announced in a statement on SpaceX's website, confirming Bloomberg's earlier scoop. For more, let's bring in senior strategist Neil Campling. What is Musk trying to achieve with this tie-up? We were debating whether or not this is a win for shareholders and xAI, given the money burn from that company.
It's a win for xAI. Well, it's a win for the rest of the Musk network. Remains to be seen. I mean, I think the reason this is happening is because xAI has run out of cash. X ran out of cash combined with xAI has now run out of cash. Now, Bloomberg Intelligence estimate that xAI burnt through $11 billion of cash last year. And actually, their revenues was just over $100 million for Q3 of last year. I mean, and they just cannot compete in terms of, you look at the big funding that's going on with OpenAI's network, etc. So they had to combine this. Now, they also still expect to have the IPO of SpaceX coming through later in the year, which is what people are excited about.
Okay.
But
do I discount it, therefore? Is SpaceX worth less once they put these businesses together?
I think probably it is, isn't it? Because we were talking, actually, last week, I think, when we were talking, Bloomberg came out and said they've hired all the big banks, and they're looking at $1.5 trillion IPO valuation. And now we're combining at 1.25. And so questions are being asked about what is the value of xAI and how much more cash are they going to burn.
And it's still planning to IPO. I mean, they say that this is about cost efficiency and will lead to greater human understanding of physics and all the rest, because we're going to put these data centres, Neil, in space.
That's from the people who make Grok. Great understanding of human intelligence. I mean, Grok is...
Yes. Turning out very intelligent things. So what, do we not buy into that as the rationale for why this is happening? Data centres in space, no? Does that not have a...
Well, I mean, data centres on this planet are costing an absolute fortune. And look at the energy consumption. So orbital data centres...
The sun's cheaper, I suppose, is the logic.
I mean, look, they've done a great job, SpaceX, of pulling the satellites up, etc. They've done a fantastic job. I actually put that down to the COO rather than Musk personally. She's done a fantastic job since she's been there. But this whole future, we're going to have 1 billion robots, and we're going to have all that. There's a lot of hopes and dreams here, but hopes and dreams are burning through billions of cash.
Palantir. Decent forecast. Hopes and dreams. I mean, the earnings per share forecasts. What am I on 148 or something? The stock was on a tear in 2025. It's been on the downside, but they came out of the forecast 6% growth in 2026. So it's all plain sailing now for Palantir.
They've had accelerating growth for 10 quarters in a row. They did put up 60% revenue growth year on year last quarter. Fantastic, but they had to, because it's trading on 56 times forward sales, not earnings.
Sales, okay.
Sales. Now, the best line in the report was what the CEO said. The CEO said, "This report is a cosmic reward for our believers." That's a tick to the YOLO, the Momo, the momentum, the AI,
sound very
the
convinced.
retail. Well, it's just it's very much a concept stock. Now, not necessarily disputing the technology, but it's not a guaranteed winner from AI. So I think, and any stock trading on that kind of valuation has got to continue to beat, continue to accelerate, because the minute that party stops, there's only one way, and that's gravity.
That's quite doomy. Well,
gravity is important.
Yeah, that's also true. Christian Nolting at Deutsche Bank saying AI's in a boom, not a bubble. So, but you don't buy that.
Well, it's not so much that I don't buy into the AI boom or bubble, but it's more the case of, look, what AI has done, and we saw it with SAP last week and Microsoft, is the terminal value of software gets destroyed by AI.
Yes.
That is a fact.
Okay. We talked about that.
I think the key focus really is on when are we, and we discussed this yesterday, when are we going to see the ROI from the trillions being spent on AI? That's the key question.
Big question is, what have you got to switch to?
I've got the original. I know. I'm just not. I don't tell the kids how good to switch to is, though. Otherwise, that's going to cost me another £400, isn't it?
Okay, let's stay with us. Don't go anywhere. Nintendo, smaller than expected quarterly profit overnight. Switch to actually doing fairly well. The issue here, and we discussed this with other stocks as well, is the rising cost of memory chips. Nathan Naidu from Bloomberg Intelligence joining us. The Switch is selling quite well, isn't it?
The Switch is selling quite well.
But it's getting more and more expensive to produce.
Yeah, and actually Nintendo is it's the only major console maker that has not raised prices on the Switch 2, but we have seen Sony and Microsoft actually raise prices of their latest generation consoles by 10 to 30% range. So
because of the chips that are going into these things have got big processors in them.
Chips as well as tariff impact.
Oh, right, okay. So in terms of what they do, should we expect therefore them to have to raise prices? Is that what the next step is?
I think Nintendo president has come out and said that in the near term, they probably won't need to raise prices of the Switch 2, whether that's due to memory prices or tariff. I think they have enough memory stockpiles to produce the Switch 2. They have also stockpiled the Switch 2 console itself on the ground of the US. So that tells us that if Nintendo, probably won't have to raise prices for the Switch 2 until at least 2028. But if the issues of high memory prices rather linger into 2028, then we think the Switch 2 prices probably have to be hiked.
Okay, what's the competitive landscape look like for Nintendo right now, Nathan? Is it still the usual names that we talk about many times, the other console makers, or do we think more widely about the competitive landscape, given the competition for eyeballs and the amount of competition for people's time these days?
Right. So the video game consoles market is essentially split between Microsoft with the Xbox, Sony with the PlayStation, and Nintendo with the Switch 2. But Microsoft has largely lagged behind in terms of grabbing that gamer share in consoles, and that means that Nintendo with the Switch 2 is probably going to take some share from Microsoft or elsewhere. But Sony, PlayStation 5 remains the most dominant console in that market. But console as a whole is losing share in terms of time share to mobile as well as PC. But Nintendo Switch 2 just became the best-selling Nintendo console ever. So that's a very good sign that Nintendo is going to maintain.
Shipping a lot of units. Neil, what's your favourite game on the legacy, the dusty old original?
On the dusty old,
Switch
on the Switch, I played Witcher, and on the Xbox, it's like FIFA, or as now
that's not FIFA anymore, is it?
It's not FIFA anymore. Although, of course, I think the big one. I'd love your view on this. Is GTA. Which is a massive, with the attach rates for GTA for console sales on the Xbox and PlayStation, GTA 6 when it comes out, that's going to be clearly probably a halo effect for the gaming industry.
Halo effect.
There you go, see?
I mean, GTA 6 is building on a GTA 5 that has sold more than 250 million units.
Wow.
Yeah.
It's easily the third or fourth best-selling game of all time.
Is it designed in Scotland still, GTA? Did they completely get that wrong? I thought the designers for Grand Theft Auto.
Rockstar up in I still use the Switch we use it for bowling, the old one. Hook it up
something a lot more innocent
to a big TV.
than GTA.
It's fantastic. Indoor bowling. It's absolutely amazing.
Nathan, thank you. Thank you, Nathan. Thank you for joining us. Nathan from Bloomberg Intelligence and Bloomberg Senior Strategist Neil Campling. Thank you as well. Thank you both for joining us to talk about those two tech themes this morning. Coming up on the programme, gold has jumped, clawing back some losses after the abrupt unwinding. We will have more on the precious metals. That conversation coming up next. This is Bloomberg.
Happy Tuesday. This is the opening trade. We are 30 minutes into today's session. Fresh record highs for European stocks despite all the volatility in precious metals, in FX. Equity markets continue to grind higher. The DAX, a screeching session right there. Scorching session over in Germany. Gains of more than 1%. Up 0.6% over in France despite the drag that's coming through from Publicis and the media as a sector is underwater. But its basic resources, its industrials, tech to some extent as well, doing some of the heavy lifting across the benchmarks. FTSE 100 up 21 points, 0.2%. Gold and silver now up 10% the last time I checked. Guy.
Fresh records in Europe once again in terms of what's driving it. Let's find out. 416 up, 172 down on the stock 600. Volumes actually picked up a little bit, weirdly light yesterday. In terms of where the leaders are coming from, the financial sector certainly delivering this morning. Amundi at a fresh record. That's that huge European asset gatherer having a very good day. The numbers look good. The market has driven that stock up by 4.27%. The mining stocks, the gold mining stocks are back. Fresnillo is up, bouncing back after a difficult Monday. And the tech story's back as well. Look at that. ASML, the lithography maker, up by 1.5%, charging higher. And in terms of the points pull, the biggest gainer, That is the story on the upside. The story on the downside looks like this. Some disappointing lupus data out of AstraZeneca, dragging that stock down. Publicis, its numbers this morning. And I was talking about the whole AI story and what we're seeing there. That stock is down. Akzo Nobel, we talked about what was happening in the coatings business, the paint business, painting a muted outlook going forward into 2026 when we spoke to the CEO a little bit earlier on. The market asking questions once again. The stock down by 4.42%, Anna.
Let's get an update on some of the other news flow this morning. French inflation has unexpectedly eased to a 5-year low, staying well short of the European Central Bank's 2% target. Consumer prices rose 0.4% from a year ago in January, below the median estimates. French inflation has been an outlier among the euro area's biggest economies, and today's data is unlikely to worry ECB officials gathering this week in Frankfurt to set borrowing costs. President Trump is pushing House Republicans to accept a deal he struck with Democrats to end the partial government shutdown. In a post on Truth Social, Trump told lawmakers to swiftly pass the measure with no changes. The bill would fund most agencies through to September and the Department of Homeland Security until February 13th, preserving funding for immigration raids while both parties negotiate changes to enforcement policies. And China is looking to expand its copper inventories to secure supply after the strategic metal surged to record highs. According to government officials, the country will explore ways to work with key state-owned smelters to boost commercial inventories and protect the economy from supply disruptions. Tom.
OK, from industrial metals to precious metals, gold jumping, silver also up around 10% right now. So clawing back some of those losses after the abrupt unwinding of course, its record-breaking rally that had seen and driven prices down. I'm talking about gold here, down 13% in just 2 days. Ronan O'Connell, StoneX head of market analysis, EMEA and Asia, joins us now. Ronan, good morning. So further upside for the precious metals, are we done? What do you make of the volatility that we've seen over the last couple of trading days when it comes to precious metals, and how it should inform our view about the journey ahead through the rest of this year?
Right, well, silver is no stranger to volatility at all. It's a smaller market, or it's quite deep in its own right, but it's a much smaller market than gold. And what you will tend to find is that when there's a change in trend, it doesn't matter whether it's into a bullish phase or a bearish phase, silver will always move by a greater degree than gold does. So generally speaking, as a rule of thumb, if gold moves either up or down by X%, let's say, then silver will typically move by 2x or even 2.5x, and sometimes a lot more than that. So what we had last Friday particularly, and then carried through into Asian hours over the weekend, was, as you say, a massive unwinding of what had been a vastly overstretched move, certainly in silver and to a lesser extent in gold. Now, for years, I've always referred to silver as a Cinderella metal, although within the last few weeks I've actually been using the term Icarus because it's been flying too high. And the analogy there is that when silver does rally and comes to the ball after the fairy godmother, usually in the shape of the gold price, has said that you shall go to the ball, when she leaves at midnight, she leaves very much more quickly than she arrives. And it happens time after time after time with silver rallies. It can be a very dangerous metal to trade. Its historical association with gold leads some observers to regard silver as a safe haven. I actually don't think it's that at all. I think it's more of a death trap, to be perfectly frank.
OK, so there's a risk. How much risk premium is priced into silver then?
Too much. It's a very difficult metal to which to ascribe a cost of production in the same way that you could with copper, for example, because less than 30% of silver mine production is actually from primary silver mines where you can obviously allocate a cost. The balance comes as a byproduct from lead, zinc, copper or gold mines. So silver's supply side is a function of the business models for the base metals predominantly, as opposed to its fundamentals in its own right. So price action is almost exclusively driven by the existence or lack thereof of demand for the metal. So that's one of the reasons why it gets tied to gold. So you can't actually say that pull a number out of the air, at $30 per ounce, it's got a good floor, or at 120 it's got a good ceiling. It dances to its own tune. So from my point of view, as a fundamental analyst, when we get to these kind of rarefied levels, that's where you have to start turning to our technical colleagues for guidance and looking at simple parameters such as moving averages, for example, or the RSI, and looking at the Fibonacci retracements, which is one of the more reliable elements, both gold and silver actually unwound the 61.8% retracement level over the course of Friday and Monday, going back to where these steep rallies started. So up towards we're looking back up at about just coming up towards $90 per ounce for silver and just shy of 5,000 for gold. All the different geopolitical elements that have been supporting gold are still in play, with the one key exception, which I believe was actually the trigger for the unwinding last week, which was the president's announcement of Kevin Walsh as his nominee. Frankly, he could have named anybody. It really wouldn't have made any difference. The key here was that one important area of uncertainty was taken out of that supportive matrix, and that I believe was what started the headlong falls end of last week.
Ron, if you look at who's been buying, it's been the Chinese. Are they in control of this market? Is that where the real story lies?
It's a very important part. You can't. One shouldn't really look at it in isolation, but certainly they are a key element here. There's one area of confusion in the market with specific respect to Chinese supply of silver. Quite a lot of China's silver production is as a byproduct from copper smelting, and they have export licenses. Now, there was a change in the regulations about five weeks or so ago now, which was talking about silver exporting licenses, and parts of the market, people who don't follow it very, very closely and therefore can't be expected to know all the different nuances. Some people took that as a signal that silver exports from China were going to be controlled or tightened up. In fact, that's not the case. All they were doing was rolling over licenses. So that's another area of uncertainty which needs to be cleared up. As far, excuse me, I'm sorry. As far as their overall role in the market are concerned, they're the world's largest producer and consumer of gold, as indeed they are for the vast majority of raw materials nowadays, and they are very important in the silver market. As far as day-to-day buying is concerned, we've got the Lunar New Year coming up. By markets close, I think, on the 16th of February for the celebrations of the Year of the Horse this year. That always helps to buoy interest, and certainly there is always, as there is in other geographical areas as well, there's always a tendency to chase prices. Now, the underlying demand for Chinese silver in industrial terms is weak at the moment, and it will be weakened by this price rise.
Rona, so from here, 2026 has started in an incredible fashion for these metals.
Indeed.
Do you anticipate higher metals prices, higher precious metal prices from here, but maybe climbing at a slower pace? What does the rest of the year look like?
I know that's exactly what I would have said, yes. We've still got, as I say, or the majority of those geopolitical elements giving gold some buoyancy. We're pretty close to $5,000 already. I know there are some banking houses that are calling 6,000 as a target. I'm a little bit more cautious than that. I can see it going higher yet. The key specific element that I'm waiting for, and it could be another 5 months that we have to wait, is the decision of the Supreme Court with respect to the Lisa Cook case, because a fundamental cornerstone of the US Constitution, of course, is the separation of powers between the legislative, the judiciary, and the executive. And if that gets blurred, then there's another risk premium that will be wound into gold. If they find in favour of Lisa Cook on that appeal, then almost certainly you'll take a lot of risk premium out of gold, and I would expect it to be below 4,000 by year end on that basis.
OK, that's interesting. So, yes, the Fed chair was only part of that story, wasn't it? Rona, thank you very much. Thanks for joining us. Rona O'Connell, Head of Market Analysis, EMEA and Asia at StoneX. Tom.
OK, switching focus. Coming up, what is the newly agreed US import levy on Indian goods? The answer when we come back. This is Bloomberg. Well, before the break, we asked, what is the newly agreed US import levy on Indian goods? I hope you've been paying attention, because we have talked about it during the show. The answer, 18%, 18%. The US will cut its import tariff then on Indian goods to 18% from 25%, lower than most Asian peers. This after a surprise trade agreement between US President Donald Trump and Indian Prime Minister Narendra Modi. Trump said that Modi had agreed to buy $500 billion of US goods, cut its tariffs to zero and halt crude purchases from Russia, a key demand of the US President. Guy.
You could argue it's come down from 50% because you had the extra 25% surcharge on as well, so the drop's even bigger in some respects. OK, let's move on. Futurism, technology and innovation, apparently all on the agenda at the World Governments Summit, which is taking place in Dubai. Jemima Basechi is there. Let's hand things over to her.
That's right, Guy. You said it for me. So all of those things are on the agenda. Really happy to say that we have an expert on the topic with me. IBM Chairman and CEO Arvind Krishna joins us right now. Really good to be chatting to you on the sidelines of World Government Summit. But actually, the timing is pretty fortuitous as well, because you just had your earnings, and the results were quite robust. There was a strong market reaction right afterwards. The outlook also pretty positive for this year. What are going to be your strongest revenue drivers, do you think?
Software is the biggest part of our business and the highest growing part of our business. We've been on a journey over the last 5 years to get there. So software is now almost 45% of the business, growing double digits, and grew well above that actually in the fourth quarter that we just reported.
Your generative AI business has grown a lot in the last couple of quarters. What has happened? Why has it grown so much? Has there been a specific catalyst?
We are very focused on enterprise AI, and as opposed to running after what I'll call shiny objects, those will happen, but we run after a lot of what it takes. I'll call it the bread and butter of enterprise operations. We focus on customer service, client experience, enterprise operations, software developers, and those are use cases that can deliver today. So the questions about ROI are not really there on those. That's immediate and in your face.
But let me pick you up on that, because I guess one of the big questions is, you have your enterprises, your clients, they're buying the software. Are they actually, the end clients, are they seeing the productivity gains from investing in the software?
No client is going to write checks in the tens of millions. Even if they do, they might start, and after 6 months they'll stop unless they're seeing the return and they're seeing how it's impacting their workforce, their own productivity. Numbers drop to their bottom line that they can then reinvest to grow in their business. That's kind of the message we've been on, and which our clients are seeing.
Is it quantifiable? Can you say it's increased productivity by X%?
I'll give you our number. We have been very clear about it. We have taken $4.5 billion out of the enterprise in 200 different business processes end-to-end that we have re-engineered with the help of AI. Out of that, over 2/3 of that has been reinvested into R&D, which has then gone up by about that exact same amount. Those are public numbers.
At some point, do those productivity gains start to level off, though? Or will it continue like that?
They will level off. My belief is that you can get about 10% of the productivity in an enterprise. So we are a $70 billion enterprise. About 6 to 7 billion, you would say, it begins to level off. Then you get the second part of what you're asking. But then as software developers get more productive, we can produce products faster. That means we can grow revenue faster. But that's not a productivity gain. That's more of a revenue gain.
Okay. One of the other big questions that people tend to ask a lot in this space is what AI is going to do to jobs. A couple of years ago, you spoke to Bloomberg. I'm sure you remember that interview where you predicted that 30% of back office roles were going to be replaced by AI. First of all, has that actually panned out at IBM?
There is going to be some job displacement. And that 30% of 20% becomes 6% all in. I think 5 to 10% job displacement is likely. The onus is on us now to make sure we can give them other skills, upskilling or reskilling, so that they can have productive jobs. That does not count then the increase in jobs. When we increased R&D, we have hired 10,000 people more into R&D. So there is going to be much more hiring in those areas that are much more productive, but there is some job displacement. I'm honest about acknowledging that. But the net increase more than offsets the job displacement.
And that 5 to 10% number that you just gave me, is that specific to IBM, or are you talking in general?
I'm talking in general, and probably to IBM also, to both. We are large enough to be a good proxy.
And what are the jobs that are most likely to be replaced?
I think that call center jobs, I could easily see 50% of them going away over time. People who are on internal help desks, like IT, like HR, I think a number of those will go away. If I look at jobs that are simply doing matching of documents to make sure that they're the same, like happens in accounts payable and accounts receivable, I could see half of those go away. That's the nature of the jobs that is going to reduce.
I want to go back to something you said at the beginning, which is that there's lots of people chasing shiny objects. And I think, AI obviously is no longer new to many of us, but it is the subject of many of conversations. And there is a concern out there that the valuations, or what is implied, the forward growth trajectories implied by these valuations, are not going to be commensurate with the types of returns that analyst community are hoping for. What do you think is the most overhyped part of the AI ecosystem right now?
Look, I think that a lot of the people who are investing are doing it out of their cash flow. I think that those companies are going to be fine, and so are their investors. Could there be some correction? Maybe, but they'll get through it. People who are going only on debt and debt financing could see an issue, because then if there's any perturbation in their growth rates, people get worried. And we have seen what happens when that movie happens. So, but I think that's only maybe 20% of the total. It's not the majority. I'm convinced on the enterprise productivity side of AI. I'm convinced of how it can help governments and citizens. We haven't even talked on how it helps people in education get education to those children who don't even have access to good teachers. So there's a lot of positives which will play out, but it will take a decade to play out.
Do you think that one of the bottlenecks is going to be the sheer amount of compute power, or do you think that that is not something that you need to worry about?
I am not worried about it, because I believe that our industry is incredible, and in the next 5 years, I fully expect to see chips that are 10 to 100 times less power hungry for the same outcome. And if that's the case, then we only need a tenth of the power we're talking about.
Yeah, okay. What is the biggest risk to your business then? Again, in this context, we've spoken about potential valuations, and markets can be quite flippant. We saw it in the last 24 hours with precious metals. Is it valuations? Is it geopolitics? What do you worry about?
I think that being in the technology industry, I should be paranoid about competition. Meaning, can other people do what we are doing in a way that is easier for our clients? Always when there is a disruption in technology and companies get hurt, they don't make it easy enough for their clients, or they miss the shift. I don't think we're missing the shift, so I've taken that risk off the table. But if somebody else does it in an easier way, that's a problem.
So how do you keep your edge?
You got to keep your ears open, you talk to your clients, you listen to them, and then you focus on what you can be really good at.
I don't want to let you go without asking you a question about quantum computing, because I think there's, again, a lot of excitement about this space, but a lot of questions about when it actually will become commercially viable. You have some visibility on this.
We have committed that 2029 is when we believe it will be commercially viable. We have said in 2029 we will put a large-scale, fault-tolerant quantum computer for use by people. I think that's a machine that can sell and can draw a lot of value for its clients. And so if that's the goal, the path from here to there, we believe, is largely an engineering path, not a science path. That then gives you a lot more confidence in the roadmap and the timeline.
Okay, so maybe we'll be here in 3 years' time talking about quantum computing and your role out there.
Love to do that.
Arvind, thank you so much. Really good to chat to you. That was Arvind Krishna, Chairman and CEO of IBM, here on the sidelines of the World Government Summit. Anna, back to you.
Jumana, thank you very much, Jumana Pasecha, there from that summit. And that is the second mention in one morning of quantum computing, so that's exciting. Theme of the morning, Tuesday, 3rd of February. Let's tell you what else is coming up on this day in markets. 1 o'clock UK time. The Fed's Barkin will be speaking about the US economy. We have the Fed's Bowman also speaking. The conference we just saw Jumana at, the World Government Summit, that gets really underway today. AMD is going to be in focus with a lot of the themes that we were just hearing about from IBM, perhaps in the spotlight. Merck, Pfizer also out with earnings. Let's talk to Bloomberg Markets Live's Skylar Montgomery-Koning, who can talk us through some of the things on her radar. Skylar, good morning to you. Just going through that daybook, doesn't seem to be a huge amount of macro. I mean, there's some Fed speak. Not sure we're tuned into that. What's top of your list today?
Yeah, I mean, it's quite hard because we're having some of the data that we thought was going to come in removed. I think generally I'm really looking for any signals on the U.S. economy. So what we saw yesterday is we got ISM numbers that were stronger. That kind of turned around sentiment. And equities in particular look to be looking for positive signals that mean they can rally. And I think that tells you a couple things. It says that the sell-off that we got or kind of wobble that we've gotten is more related to volatility than it is to fundamentals. And if you look at something like the economic surprise index for the U.S., that's shot higher on the ISM number. And so if you have strong growth coming through, then that means strong earnings, and that means equities can do well. So it's both, what does the macro data tell us, but also what does the earnings tell us?
So it's a good news is good news environment rather than good news is bad news, which is something we got used to for a very long time.
Let's talk about what's going on down under. How are we feeling about the Australians this morning? Are they isolated down there, or are they just first to market, as it were, with a rate hike?
Well, that's the thing, right? It wasn't that long ago we were looking for hikes from a number of central banks. And what we saw with Australia was that that story can change very quickly. So you go, well, how can I transfer this to other economies? In that inflation is above target in Australia, but their inflation target's actually a little bit higher. So they target 2 to 3%.
Yeah.
And they're just above 3%. You can see somewhere like the U.S. have inflation that's well above target. And the thing is that it's balanced by the labor market, but the labor market in Australia heated up very quickly. So if you start seeing signals that the economy in the U.S. and labor market in particular is stronger, I don't think thinking about hikes is that far off. So I think I think this year certainly it'll be a story in terms of as soon as you get to the end of the cutting cycle, and we're not that far away, you have to think about this next start of the hiking cycle.
Scarlett, you got views on the BOE. And we've got that decision coming up this week. They're not going to do anything this week, probably. But do we rethink the Bank of England's trajectory in terms of... There was a view from some in the markets that we haven't been pricing in enough cuts at the beginning of this year. But is there a lesson from the RBA to the BOE?
I think there's a little bit of a difference there in terms of you have measures in England that mean from a fiscal perspective, inflation will automatically be something like 50 basis points lower this year. So inflation is certainly not as much of a concern, but I think definitely from the perspective of is there maybe too much dovishness priced in? Potentially the next meeting I think is quite significantly priced in. It could be pushed out a little bit further. And I think that's just because as you get to the end of the cutting cycle, you're more unsure of where neutral is, how far you have to go. And so that means that you need kind of more wiggle room around that.
Do you have a view on neutral for the BOE?
I mean, neutral is quite hard to pin down there.
Yeah.
I think you're kind of aiming for 3 to 3.5, but it's a wide range, right? I don't think it's something you can measure and you can kind of say, well, yeah, the economy's doing well, but you've had supply constraints that kind of mess up where you're thinking about it because they've both had supply from a perspective of the labor market becoming much smaller post-Brexit that's still impacting, as well as kind of lower demand from the idea that you're not able to produce as much or trade as much.
Scarlett, thank you very much indeed. Bloomberg Analyst Scarlett Montgomery-Koning. We've got some deals. In fact, the Deal Show, Bloomberg's Deal Show tomorrow, hosted by Danny Berger, right?
Yeah,
that's right.
Tomorrow. This is going to be great. You want to tune in for this. Brand new show launching this week. Catch Bloomberg Deals. Premieres tomorrow at 5 p.m. London time.
That's it for today's show for the opening trade. We'll look ahead to AMD earnings. Those are coming later. Continue the focus on tech. This is Bloomberg.